And to talk more with us about stocks and investment strategies is Daryl Liew of financial group Reyl Singapore. He joins us from our city studio at OCBC Centre. Morning, Daryl. Thanks for joining us today. Is the door open for the Fed to start tapering its stimulus program following the better than expected October jobs data we've just seen?
Well, yes, because if you look at it, we have very strong non-farm payrolls. The ISM numbers in the US are very strong as well. But on the flip side, the GDP numbers came in a tad weaker than expected. And I think because of the government shutdown a couple of weeks ago, Q4 GDP numbers are going to be probably a bit below expectations. So basically, we expect that tapering will still happen early next year.
All right. In that case, the Dow and the S&P 500 hit record highs this month. So are we seeing signs of a bubble?
Well, every time the stock markets hit an all-time high, it's always a time to be a bit more cautious in terms of whether you want to get into the market at this point in time. However, having said that, the US economy definitely looks like it's on solid ground. The fundamentals are pretty strong, as we said before already. So I don't expect that there will be a correction, and I don't think there's a sign of a bubble emerging. However, there could be some profit taking, and there could be a correction, probably in the range of maybe about 5% from current levels.
So you don't think the market's ripe for a pullback before the end of the year, particularly bearing in mind the Fed could begin reducing its stimulus even in December?
Well, I think the market could pull back a bit. There could be a bit of a correction, but I don't foresee that there's going to be a crash. I don't think you're going to see something like more than a 10 to 15% kind of fall. But having said that, profit taking is probably going to happen, and when QE tapering happens, that's probably going to cause a withdrawal of liquidity in the marketplace, and markets will probably come down a bit.
And so do you expect to see a sell-off in Asia's emerging markets then if the Fed does roll back its stimulus measures sooner than expected?
Well, answer to that is yes. We all saw what happened in the summer when there was talk about QE tapering. Asian markets fell about 20%, from the May highs. So basically, I think investors do need to be a bit cautious because tapering is going to happen. It's just a question of when that's going to be. Investors are probably going to position themselves ahead of the tapering. So I do expect that there will be a fall in a number of Asian markets, so investors have to be a bit cautious.
Right, at the same time, does the pessimism over Asia's emerging market stocks make them a bit of a bargain, perhaps?
Yes and no. When you look at it purely on valuation grounds, particularly a lot of North Asian companies, for example, I agree, definitely looking very attractive from the valuation ground. However, I think one word of caution there, sometimes you got to look at the fundamentals and you look at the technicals. And if fund flows are moving against you, what can look cheap today can be cheaper in a week or a month's time. So I do think you need to look at both of them together. So while something is cheap today, you need to be cautious because once liquidity goes out and fund flows move against you, markets could fall.
Now, the Philippine stock market had been the second best performer in Southeast Asia so far this year, up about 8%. But are those gains going to be wiped out by Super Typhoon Haiyan? That's obviously hurting the economy there. And there has been a bit of a recovery yesterday in the market there as well.
Yeah. It's obviously a very unfortunate event. We have seen a bit of a correction over the past week. Yes, there was a bounce back yesterday. I think the Philippine stock market is down about 3 to 4% so far this month. But having said that, when you look at the fundamentals in the Philippines, it's probably got one of the strongest fundamentals in Southeast Asia. You've got current account surplus, you've got economic growth, which is probably going to be relatively robust, definitely above 5-6%. Expectations before this event was that GDP growth could be around 7%, but probably that will be moderated down somewhat because of the crisis, because of the events that we seen last week. But having said that, I think the markets could bounce back quite quickly. So we were still quite positive on Philippines, and this could be actually a buying opportunity.
Politics continue to weigh on the Thai stock market at this moment. What's your long-term view of the Thai market?
Well, long-term we are constructive because despite all the political problems, the Thai stock market has always had a reputation or a track record of actually overcoming these political issues. Because companies still seem to be able to run as pretty much as normal and profits and basically earn the profits. But besides the short-term political issues, which I think eventually will be overcome, I think we are also concerned about that consumer spending in Thailand is getting a bit stretched. So we've seen some moderation in terms of consumer numbers over the last couple of months. We do know that consumer debt is relatively high in Thailand, so that's something that we are watching out on. But I think over the middle and long term, we're still quite positive over the Thai economy and the stock market there.
All right, just one last question for you then. Quite a bit of uncertainty at the moment, particularly because of whether or not the Fed is going to reduce stimulus or not by December. What's your investment strategy then for the rest of the year?
Well, we're currently being very nimble. We're still slightly overweight equities in the portfolios, but we have actually taken advantage over the last couple of weeks to actually take profits on certain positions that have made money. I think moving into the next couple of months, it's going to be on opportunistic and tactical trading. If we see an opportunity, let's say for example the market does correct 5 to 10%, we'll probably go back in and buy again. If the markets on the flip side decide to rally some more, we're probably going to sell some more of our existing positions. So it's really based on what the market's going to do, but we're going to be very tactical over the next couple of months.
All right, well, thanks very much indeed for that, Daryl Liew of Reyl Singapore. And that's a wrap from me for now. Back over to Steve Zuzan.